Live from Bloomberg's world headquarters in New York, I'm Sonali Basak.
And I'm Kailey Leinz. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Over the next 30 minutes, we'll dive deep into a potential watershed moment for crypto. Grayscale moves closer to launching a spot-based Bitcoin ETF in the U.S. after an appeals panel overturns a decision by the SEC to block it.
And Bitcoin soars on the news, unleashing gains across the crypto space, including a $2 billion rally in the fund at the center of the controversy. That is Grayscale Investments Bitcoin Trust.
And we have an all-star lineup of guests reacting to the news, including Coinbase Chief Legal Officer Paul Grewal and Galaxy Digital's Alex Thorn. So all of that is coming up, but let's talk about that market action that Sonali just mentioned, because right around 10:30 or so when this news dropped, you saw a big spike up in the price of digital assets across the board, including for Bitcoin, up 7.7%, actually right now on pace for the best day since March. Now just shy of $28,000 after being more like $26,000 earlier in the session before we had that ruling drop from the DC Circuit Court. And then, of course, the real thing in question is the Grayscale Bitcoin Trust, GBTC, getting a nice lift today, up 17.4%. That discount to net asset value is closing just a bit off the back of this, though. Keep in mind, it's not turning into a spot ETF tomorrow. There are still many steps to go here, and we're going to run you through those in just a second. And finally, I would just note it really is anything tied to digital assets across the board that is getting a boost here today, any stock tied to crypto included. But Coinbase, one of those big movers out there, it's up about 14% at this point in the session, Sonali.
And this is part of what a DC Circuit judge said in her ruling, that the denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products. In the absence of a coherent explanation, this is unlike regulatory treatment of like products is unlawful, she says. We therefore grant Grayscale's position for review and vacate the commission's order. And for his part, Grayscale CEO Michael Sonnenschein responded on X, saying the DC Circuit ruled in favor of Grayscale in a lawsuit, challenging the SEC's decision to deny GBTC's conversion to an ETF. Thank you to everyone, he says, who has been on this journey with us, especially our investors. We are grateful for your support and encouragement. Next up, our legal team is actively reviewing the court's opinion. Follow Grayscale for updates.
So you can follow Grayscale for updates, but you can also follow us here at Bloomberg. We've got team coverage of this for you. Starting right now, this potential watershed moment in the crypto industry. And here to weigh in on it is Bloomberg's Vildana Heinrich, and from Bloomberg Intelligence, Elliot Stein and James Seifert. So Vildana, let's just begin with you. Tell us what we need to know about this ruling and where this goes next.
I think one of the key words for this ruling is that it's monumental. So we heard from person after person using the word monumental. It's sort of like the buzzword today. And I really think that it is. And maybe a hint of how important it is to the industry came this morning when you try to go on the court, on the DC court website, and it was just absolutely crashing and unbelievably slow because so many people were trying to log on and see if the ruling would indeed come out today. We have Bitcoin rallying something like 7-8%. We have GBTC rallying even more, meaning that likely we could see the discount to its underlying holdings actually narrowing further from what we had seen over the last couple of weeks. And we'll have those numbers out tomorrow. But really, I do think it is a watershed, monumental moment because the fight for this has been so long. It doesn't mean we get a spot Bitcoin ETF right away. I think that's key. We have to remember that. But it is one step potentially closer to getting that spot fund, which issuers have been trying to achieve for the past decade or so without much luck getting approval from the SEC.
Vildana Heinrich, thank you so much for your time. Now, we did get a response from the SEC. A spokesperson gave a statement, quote, "We are reviewing the court's decision to determine the next steps." We're going to discuss those next steps with Bloomberg Intelligence senior analyst Elliot Stein. Elliot, what comes next?
Well, you have to remember that this was a decision by just 3 judges of the DC Circuit. The SEC can ask the full DC Circuit for review, or it could even ask the Supreme Court for review. I don't think either of those paths will be successful for the SEC. And then putting the court aside, Grayscale's application basically goes back to the SEC for review, where the SEC could try to reject it again on different grounds. We don't think they're going to succeed there. They don't have a lot of wiggle room after this opinion. The SEC could approve the application, perhaps in conjunction with approving several other applications, which is what Grayscale has asked the SEC to do. Or it could pull the rug entirely on Bitcoin futures ETFs, which it's previously approved, but we think that's highly unlikely.
All right, Elliot Stein of Bloomberg Intelligence, thank you so much. And now let's bring in Bloomberg Intelligence's ETF analyst, James Seyffert, to discuss what this means for those other crypto spot Bitcoin ETF applicants. What do you think this means for approval of all of the other attempts that are out there, James?
Yeah, I mean, so this definitely increases the odds of approval for those products. I mean, what we kind of also had this baked in a little bit. I mean, Elliot Stein, who just spoke, we're back in March, right after we heard the oral arguments, me and him went to 70% odds that Grayscale was going to win. So it's nice to be a little vindicated here on that front. But this doesn't mean a guaranteed, as you kind of said at the front, a guaranteed approval of spot Bitcoin ETFs. There are a total of 11 people out there trying to get ETFs that will hold spot Bitcoin, including Grayscale. So Grayscale now is obviously much closer to converting this thing to an ETF, but as you mentioned, it's not guaranteed. We need to see what the SEC is going to do. The SEC had issued statements saying they don't know exactly what they're going to do. As Elliot hinted, they could theoretically withdraw Bitcoin futures ETFs because this was a complete and utter rebuke of every argument that the SEC has made in their denial letters. Basically, what the judges here are saying is you can't make arguments about fraud and manipulation in the underlying spot markets when you're allowing Bitcoin futures ETFs to exist. So this is a complete rebuke of those arguments. The only way the SEC, if they decide to go back and find another way to deny these things is, like I said, like Elliot said, withdraw the futures ETFs or find a different way that has not yet been argued. And the only way to do that I can think of is argue that you need some sort of regulated custodian, have issues with the custodian or settlement of the actual spot Bitcoin, because it needs to be something completely untangled from Bitcoin futures ETFs. But honestly, the easiest path forward here is just for them to approve these things. And the timeline is kind of up in the air, and we're going to wait to see what the SEC does.
That's James Seyffert of Bloomberg Intelligence. Thank you for your time and all of your analysis. Now, Paul Grewal is the chief legal officer at Coinbase and has been watching this case, as well as almost every other one in the crypto industry, quite closely. Paul, thank you for joining us. When you see the ruling that was made today, what does it mean to you?
Well, it's great to be on with you all. And what it means for Coinbase and really for all of us in the industry is that courts once again are stepping in to provide regulatory clarity where the SEC has refused to do it. This was a unanimous opinion. You had a very strong analysis written up by Judge Rao, joined by Judge Edwards and Chief Judge Srinivasan. It just shows again that the SEC, when it acts contrary to law, without regard for developing common rules and standards, is going to find itself held accountable in courts of law.
Now, I know that nobody here has a crystal ball, but in your own dealings with the SEC, do you expect that they would just take this, or do you expect them to put up more of a fight when it comes to either this rulings or rulings like it? I mean, there are a lot of outstanding lawsuits when it comes to how it's dealing with the crypto industry.
Well, there's certainly been no shortage of resolve on the SEC's part, and it's true that in this case, you could see a request for further rehearing en banc, or even a petition for cert review by the Supreme Court. But I think the wiser course, the better course, not just for the SEC, but for the industry as a whole, is for the SEC to take a pause and to take to heart the lessons that the DC Circuit was encouraging it to consider in this ruling. Yes, it's possible that on remand, the SEC could come up with new reasons, new excuses why this product should be, or this conversion should be rejected. But it's also an opportunity, I think, for the commission to acknowledge that its course of action, its approach to regulating crypto isn't working. It's not too late to get this right. We think this offers an excellent opportunity for the commission to take a pause on its approach and adopt a much more productive, much more effective means of bringing clarity and certainty to this market.
Okay, but Paul, to your point about maybe the SEC could find another way to poke holes in the case for a spot ETF conversion on the part of Grayscale, or really just a spot ETF in general, does it become an issue of something like custody or surveillance sharing, so other concerns that they have raised?
Well, they could raise those concerns. I think surveillance sharing in particular is one where the industry has anticipated that argument and responded to it. We've seen agreements proposed, including those involving Coinbase, by other applicants. I think it's time for the SEC to take a break and to pause and reflect on why its approach to regulating this market hasn't worked, and what are the underlying concerns that it's trying to address and should be addressing. Surveillance sharing agreements are certainly one way to manage that. I think the better course, though, is for the SEC to engage in a dialogue with the industry rather than relying upon court actions in order to resolve these questions.
Perhaps explain a little more, given that Coinbase is a big part of so many of these surveillance sharing agreements, SSAs for short. What is the case for those surveillance sharing agreements to kind of bolster the argument for approval for these ETFs?
Well, the fact of the matter is that we are confident that these surveillance sharing agreements with the listings exchanges can effectively mitigate or reduce the risk of market manipulation. And of course, the standards that would apply would be the same standards that apply to other asset classes with ETFs. So we do think these agreements can be an important part of the solution. Of course, Coinbase has a significant role to play as a custodian. There are just better, more effective ways to address the concerns that the SEC has raised than simply rejecting these applications out of hand and relying upon court decisions in order to set standards.
What about Coinbase's business model? There's a lot of debate. On one hand, you see Coinbase soaring in the market right now on the heels of this decision. On the other hand, you have some analysts like Mizuho kind of pointing out here that the emergence of an ETF could really long-term make a difference when it comes to fee structures, when it comes to crypto trading. How do you think about this holistically?
Well, for Coinbase, the opportunity lies in growing access to the crypto economy as a whole. And so to the extent that exchange traded products bring other market participants into crypto and offer another way for investors and consumers to safely and effectively participate in the crypto economy, we think that benefits Coinbase. The fact of the matter is that there is plenty of opportunity for all participants, and we welcome additional ways in which investors and consumers can participate in the crypto economy. We think that's a win for Coinbase as much as anyone else in the industry.
So, Paul, obviously, Coinbase has been dealing with its own litigation with the SEC in regard to allegations that it was operating an illegal securities exchange by having unregistered securities, quote unquote, on the platform. Of course, that was really the question with XRP as well, the idea of the definition of a security. It feels like there's still a lot of legal murkiness around it. Where do you think your case stands now, given some of the other cases we have seen and the indications of the direction that courts are heading in regard to some of the SEC questions?
Well, to be very clear, we think that the best long-term solution looking ahead is still comprehensive federal crypto legislation. Of course, we're very encouraged by the bipartisan momentum we've seen in the House recently on that issue. But while we wait for legislation, we remain very confident in our position in our case with the SEC. The fact of the matter is that in the XRP case, and even in other cases that have followed, courts have rejected the fundamental claim by the SEC that these digital assets are themselves securities. Instead, what they've said is, let's look to the transactions involving those assets and assess them in that manner. And we think that as courts look at this type of approach, adopt this type of approach, they're going to find that particularly when it comes to secondary trading on exchanges like Coinbase, the federal securities laws as currently drafted do not apply. It's one of the reasons why we think new legislation could and should be adopted to address the underlying concerns that we share with the SEC.
Something to think about here, too. And Paul, I want to put a little context here. You have worked at nascent technology companies before Facebook, prior to Coinbase. When you're kind of looking at the evolution of the industry, both from your perch at Coinbase and as a member of this crypto industry that is really just burgeoning, what's the roadmap? How are you looking at these cases from XRP to your own case? And what are the uncertainties you need to have clarified immediately?
Well, it's certainly the case that anytime you're dealing with disruptive technologies, you're going to have instances or situations where litigation may be necessary in order to resolve outstanding questions. But litigation is no substitute for comprehensive legislation. And that's why we are so supportive of the bills that are pending in the House right now that would, for example, confirm that these digital asset tokens are not in and of themselves securities, as the courts have already held, that would provide for a path to registration so that cryptocurrency exchanges like Coinbase can come into the regulatory perimeter and fully comply with the legal standards that are applicable here. even as we look to offer digital asset securities in the future. So confirming a path to registration, confirming a sensible, workable definition of securities that distinguishes between the vast majority of assets that are not securities and those that may be. We think that that type of clarity is critical for long-term certainty for the market. And that's why we're working on these issues with the Congress and even with the SEC itself, even as we continue to believe that in our court case, we will win.
All right, Paul Grewal of Coinbase, got to leave it there. But thank you so much for joining us today. Really appreciate your time. And coming up, we'll speak with Galaxy Digital's head of research, Alex Thorn, will be joining us. And of course, to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg.
The big news of the day, and we're here to talk about it more with Alex Thorn, head of research at Galaxy Digital, and Kaiko, director of research, Clara Medalie, on this big news regarding Grayscale. Huge news for Bitcoin as well. Alex, Galaxy has done a lot of work on the idea of the floodgates opening at greater scale if a Bitcoin ETF were to finally be approved. What kind of interest would that draw into the system? And at what point do we actually see that come to realization? Because it's not that we do see an ETF tomorrow. We just see a ruling today.
Yeah, thanks, Sonali. Hey, Kailey. Thanks for having me back. I think it's clear that a regulated, transparent spot ETF would drive a lot of adoption. There are literally tons of types of investors that can't hold spot Bitcoin in the world. So it would give a safe and easy way for many people to access exposure to Bitcoin. I think the U.S. is clearly behind here. There are many, major economies, not backwaters, like Brazil and Canada that already have these products. Galaxy has ETFs in those markets. And when you look at the maturity of the current, both the refilings and the new filings from firms like BlackRock and Fidelity and Invesco Galaxy, there are tons of really, powerful, safe and mature traditional issuers looking to get involved here. And I think that would really open this market up for institutional investors and just many who simply can't access these products because it's too hard to use, websites or hardware wallets.
Well, Clara, to bring you in here, we've heard a lot of that this would, unlock the gates, that you would see prices moving substantially. When we have seen really an absence in volatility and not a lot of liquidity in this market for some time now, can that really change that fast?
I mean, it's a good question. This summer has been quiet, if not boring. There's been essentially multi-year lows in both volume and volatility, and it's unclear yet if that's going to change. I was looking just at the volume data right before I'm on here, and I saw there has been a slight spike as prices increase, but ultimately it's still very low relative to what we were seeing during mini bull runs last year. So I think it remains to be seen. We need more capital in the space. We essentially need more traders to, engage on these platforms to really see a material change in crypto activity.
It's interesting because the movement you're seeing, even if the volumes are light, the price movement is significant across many different asset classes. Solana up 6%, Dogecoin up another 5%. Neither of those assets are seeing an ETF filing that can see the light of day tomorrow. So Clara, do you think that the movement you're seeing outside of Bitcoin is justified? Does it hold?
Well, crypto assets are very closely correlated, and in essentially every crypto crash and crypto bull run, you see essentially very similar price movements across assets. Altcoins such as Doge or Solana, they often see bigger price movements than you would see for Bitcoin and ETH. So it's actually not surprising. It's what we've seen for years in cryptocurrency markets. And I think until we see a real, divergence in how investors treat these assets, we're going to keep seeing these correlations.
Alex, is it also just about if there is a change in the perceived regulatory attitude in the U.S. specifically?
Yeah, I don't want to say that this is indicative of a change. I will say that regulators, the SEC as an example, they've taken an aggressive approach, obviously, to this industry. There are reasons why they've done that, which I've talked about on this show before. Mm-hmm. But I think this order is an opportunity for the SEC to take another look at whether they can partner with the industry to make it work, something, a regulated, transparent product. If you think about things like FTX, this was an offshore exchange. It was not highly regulated. It was dangerous for U.S. investors to access some of these markets in crypto and in Bitcoin. Whereas, again, with the players that would be involved here, the oversight, the maturity now of these filings, I think there's a real opportunity for the SEC to maybe take another approach and look at this issue again, particularly on the Bitcoin ETF. There are a lot of other major regulatory issues that are on the table now that I know we don't have the time to talk about today, but I wouldn't say this is a signal that regulators in the U.S. have changed their posture, but I would say that rolling the dice in court can go either way.
Alex,
very hard to predict these outcomes.
Beyond that, I want to talk about the exchanges. I want to talk about the financialization of cryptocurrencies, because on one hand, this was all supposed to be DeFi. This was all supposed to be outside of the traditional regulated markets. And you're seeing, for example, Uniswap get significant volumes this year. You're seeing all of a sudden a divergence in the way people are looking at this idea of Coinbase taking a greater control of the centralized market. What does an ETF really mean in terms of the movement of crypto into a form that looks just more like the traditional markets? And will that have some pushback?
Yeah, you know what, I would even say among hardcore Bitcoiners, there has been pushback on the concept of the ETF being very bullish for Bitcoin. I've heard things from friends of mine. Why do we need BlackRock and Fidelity and Invesco Galaxy involved in this, right? We've got our decentralized future. I sort of counter with, if Bitcoin is going to be a global decentralized money, then this is kind of what hyper Bitcoinization looks like. You're going to have access to this commodity money in every possible way that you can access money if it sort of achieves its end state. And of course, to me, the issue is making sure that certain red lines are not crossed. The ability to self-custody your coins, to access them on yourself, to run nodes without being hindered. That's the core, and it's something that you can't do in traditional assets or monies. So as long as we protect that and preserve those rights and fight for those, I'm totally fine no matter how you want to access these products.
All right, unfortunately, we got to leave it there. But thank you both so much for joining us on such a big day for the crypto space. Galaxy Digital's Alex Thorn and Kaiko's Clara Medalie. We really appreciate it. This is Bloomberg.
And tomorrow, Kailey, we have an interview with Michael Sonnenschein, the CEO of Grayscale, at 10:45 a.m. If you can believe it, most of Grayscale's executive team flying back from vacation to answer to this ruling.
Yeah, what news to fly back to. Really looking forward to that conversation tomorrow on Bloomberg Markets. And of course, we'll have more analysis right here on Bloomberg Crypto next week, Tuesdays, 1 p.m. Eastern Time on Bloomberg.